want to chime in on, what type of impact all these economic headwinds are going to have as it relates to the credit and finance space. Now, banks are still going to be lending out money, right? But there's going to be a reshift in the types of borrowers that will be able to get financing. And so pretty much the shift is going away from the subprime customer to the prime customer. And the reason why is because we're seeing higher loan defaults right now in the subprime credit quality types of customers. And so banks want to reduce risks, reduce losses. Even right now, a lot of credit card issuers are cutting limits because they don't want to give enough rope for consumers to pretty much hang themselves, by having too much credit, right? Too much exposure. Because what will happen in an economic downturn is that there may be more of a reliance on credit. Let's say if your income has decreased or you lost your job or the price of things have just gone up, you're going to be using more of those credit lines. And so I've spoken to people already who have said that their credit lines have been reduced. A good friend of mine actually had a pretty decent credit limit with American Express. I think he mentioned he had like a $30,000 credit limit on one of his American Express credit cards. And after paying off a large balance, I think he had a balance of like maybe 20,000 or so. So he cleared the balance. As soon as he cleared the balance, American Express reduced his credit limit from 30,000 to just $5,000. And this is someone who has pretty good credit, probably close to 800 credit. So that's just going to show, financial institutions are preparing. They know the consumer is extremely fragile right now, and there's a lot of economic uncertainty. Interest rates are going up, so the cost of capital for any variable rate, loans or debt is increasing. So if you have an adjustable rate or a variable rate that's tied to the prime rate, you're going to be paying higher interest costs on whatever debt that you may have borrowed previously before the rate hike. So there's a lot of economic headwinds going on, and part of it, of course, is this idea that by increasing the interest rates, you're going to curb a lot of consumer spending, which I think that it does have an effect. I'm not so sure if it's going to solve the problem of inflation, because we're seeing inflation across the board, not just with consumer pricing.